This is Bazaar Morning Call. Broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi. Good morning.
Hi, good morning, Prashant. Good morning, Nigel. And it's T-1, right? The day before the union budget. Of course, this time it's a vote on account. But be that as it may, the nervous energy perhaps is rising. Also, we saw selling in late trade yesterday, and that, I think, derailed the bulls a little bit.
Well, and the big global Q as well. We'll know the outcome from the Fed tonight in terms of commentary. So, plenty lined up.
It's going to be a pack tomorrow, right? I mean, tomorrow morning, FOMC, and then by 11, we'll hear from the finance minister.
And then you have expiry, weekly expiry.
Weekly expiry as well.
So all the Red Bull and the coffee and the energy drinks and everything, keep everything ready, right? Starting today.
Absolutely. Well, you know, let's just quickly tell you what you need to know as we begin another session. So yesterday was a bit of a disappointing day if you're hoping for markets to build on what we saw on Monday. I mean, we saw that 400-point massive move, right? It was unlikely, and we said this yesterday morning as well, that, I mean, the message was not to chase the open. Perhaps you will get a pullback, but again, you know, the extent of the moves are what is surprising. For example, on Monday, you expected a bounce, but 400 points, that seemed excessive. And yesterday's 200-point pullback also on the other side seems a little excessive. I mean, so exaggerated large moves is what we've been getting over the last 2 days now. I'll come back to markets and levels, etc. in a bit. US equities pulled back. You've got the Nasdaq, which was down about 0.75%. Not very much positive, sort of, if you're looking for day-on-day reinforcement from the US market, that's not there. The Russell was down about nearly 1%. The 10-year yield lost 3 basis points, about 4%. So it's once again flirting with that 4%. It's psychological, but it's important. I mean, are you 3 point something or are you 4 point something? That matters. Dollar index cooled to about 103.40. So it's come off about 0.25% last night. You had, one indicator of the jobs market, the Joel's job openings, which beat expectations. And March cut odds. I mean, the odds that the Fed will cut in the month of March, that's now cooled to about 35%. So results are coming through. It's a big week for earnings in the US, and Microsoft reported numbers. They were largely okay, but Google is the one where ad revenues missed expectations, and the stock actually posts in after hours trading. The last I checked was down about 4.5% or so. That's a big one, right? And ad revenues are very sort of classic indication of how well the economy is doing. Companies want to spend to expand. They want to spend more on advertising. Now, there is the FOMC decision tonight, and there's no change expected as far as rates are concerned. But as I said yesterday, the hiking bias perhaps will be removed from the statement. At the same time, maybe in the commentary in the press conference, the Fed chair will go out and say that we're in no hurry to cut as well. So no hikes, but no hurry to cut as well. That's essentially the consensus expectation the market is going into this event with. Now, the interim budget is tomorrow. Expectations are extremely low, and we heard it from the finance minister no less late last year that nothing spectacular is expected since it's a vote on account, but it's an important event. Will the government reaffirm some of its larger goals in terms of infrastructure spending and those kind of things? That's what the market will be focused on, but we'll get to that in much greater detail as we go along. Now, let's just circle back to the levels here, right? The Nifty could not sustain above the 61.8% retracement of the pullback that we saw, and that was the first signal early on. And that number was, 21,700 plus. That the indication was that, maybe the pullback is going to get a little deeper. It did. The Nifty's high yesterday at 21,813 is an important resistance point then, which perhaps the market will need to sort of take out for the market to feel bullish once again. We've been ranged. I mean, actually, if you take a look at the day before yesterday's candle, it's a big red candle, and yesterday's candle also big green candle, and yesterday it's a big engulfing candle. You've eaten into almost 61.8% of Monday's move. So in that sense, it's a bearish, clear, technically bearish signal. Closing below the 40-day exponential moving average is what will, I think, give confidence to bears that perhaps, further downsides are coming. That number is at about 21,275. We're at about 21,500. So that's the first indication which the Nifty needs to get to. For the Nifty Bank, a break below the recent low of 44,429 will confirm downsides. That's not the low, yesterday, but the recent low a few days ago. And on the way up, yesterday's high, which is 45,678, will be the important marker which the market needs to take out. We'll see how it goes. And, further upside, 61.8, etc. But that's further out, even compared to where we left off. If Nifty will come up on your screen, I would say today once again is a do-nothing kind of a day because you got you got too many big moves, at least on the index level, and then tomorrow you've got the budget and the FOMC reaction, etc. So no real advantage to trying to be too cute and trying to make money, at least today. At least on an index level, that would be the advice. Sonia.
Oh, absolutely. And the selling picked up in late trade yesterday. Yeah. So there was some nervousness in late trade, something that perhaps you can't rule out today as well. It's also important to point out the flow situation, right? Because there was large FI selling yesterday. Almost 2,000 crores was sold in the cash markets. But I have my eye on many stocks. I think one of the stocks in focus today will definitely be Dr. Reddy's. Good set of numbers coming through. And it's an all-round beat for them. Not just the US business, which was strong because of Revlimid generic, but the European business also has picked up. So Dr. Reddy's will definitely be on my radar. L&T is in focus. It was a strong order inflow guidance. In fact, they've raised their order inflow guidance for the full year. However, the earnings were a bit of a miss this time. Now they're talking about ending the year with an order inflow growth of 20% plus. And that is something perhaps that the street may definitely like. Now, in the broader markets, I'm watching out for names like PB Fintech. This is the first time that PB Fintech turned profit positive, and it was a very strong operational performance as well for them. In fact, the entire new age tech companies could be on your radar. More on that later. But it's also a big day of earnings today. You have a lot of large caps. There's Maruti, Sun Pharma, Ambuja, Dabur, Godrej Consumer. So we have our hands full. And there was large buying by domestic institutions yesterday. So DI has bought about 1,002 crores. Remember, this market is not too far away from the all-time high. The Nifty is barely 1.2% away from its all-time high of 21,800. So the bulls have their grip firmly on this market. It's just a couple of these big events that need to get out of the way. Let's see how things play out. But for now, it's not a bad outcome. Many individual stocks in focus.
Well, that's right. I think the headline index, you want to wait and watch. But there are plenty of stocks and sectors as well that are getting opportunities. And that's precisely what happened yesterday. So you'll say, well, yesterday wasn't a great trading session. Well, take a look at some indices. The small cap index, that was an outperformer here. The RELT index as well, that did do pretty well in trade. And the PSU banking index, on the day that the Nifty saw a sharp decline, you had these indices that were relative outperformers. So that's telling you there are still plenty of opportunities in the market. In terms of what happened yesterday, well, the institutions, they were net sellers by closer to 1,000 crores. And there appeared there was more unwinding of positions on the Nifty futures. So there was lightening of positions, both on the long as well as on the short side. And that's what the FIs did as well, though they continued to remain net short with close to 76% of their positions on the short side. Then the options data, the call writers, they came back into play. They were writing aggressively. While the put writers, they were running for cover yesterday. We saw some unwinding even at the 21,500 put in yesterday's trading session. Because of the aggressive call writing and unwinding on the put side, you have the PCI that's come down to around 0.82. As a marker, you'll want to watch for it to go to sub 0.7. When that happens, we have normally seen a bit of a bounce. So that's one technical marker that you'll want to track. But the Nifty is facing aggressive, resistance at around the 21,800 to 22,000 mark. And I say this because the 21,700 call yesterday was very, very active. Big spike up in terms of open interest. The premium came down from around 200 rupees to around 80 rupees approximately. So that's one reason. That's the options data. The second factor is the technical reason. The 61.8% retracement of that correction from around 22,200 to around 21,200, well, that comes in this vicinity of around 21,750 to 21,800. So that's why that's a crucial level. And the bears, they look to defend this mark of around 21,800 to 22,000 odd. On the downside, though, support comes in this vicinity of around 21,100. I say this because you have the 50 DMA that's there. Few sessions ago, we went to around 21,150 and we bounced off that. So that's the market looking at the downside. Today, the index I like to look at actually is the Nifty Bank. Why is that? Yesterday, it was a relative outperformer. It has the weekly expiry that plays out today as well. And yesterday on the day, when the Nifty was down closer to 1%, you had the Nifty Bank that was more or less stable. Month to date, it's underperformed by closer around 5% approximately. It also defended the 100 DMA, in yesterday's trading session. That's what I'm talking about, the relative outperformance that we saw yesterday. And overnight, Nasdaq was under pressure and Alphabet's pulling down the Nasdaq futures as well. So I would like to see whether or not the Nifty Bank can go ahead and see some bit of outperformance or maybe hold one end up because it's been a relative underperformer. But yesterday, it showed some signs that maybe, in fact, it may want to consolidate or try to move a little bit higher from here on as well. But Sonia, you told us a few stocks that you're tracking. There's another segment you're tracking, the new age theme.
So after what PB Fintech did, I just looked at some of these companies, right? And if you look at it, PB Fintech, of course, will be in focus. It's turned profit positive for the first time. And it has the operational performance is very strong. But apart from that as well, if you look at what's happening with others, say Zomato, for example, Bernstein today has raised their target price on Zomato to 170 from 154 earlier. They talk about the twin engines delivering both Blinkit as well as Zomato. So that's something to watch. Delivery, if you look at the stock performance in the last 1 month, Delivery is up 10%. And, the selling that we've seen in Delivery, that perhaps is getting absorbed as we speak. And something like a Nykaa as well, right? I mean, it hasn't had a great run, but in the month of January, it hit a high of 193. So I'm watching out for some of these new age companies, new age tech companies. Maybe there's some buying interest that has come back here. But let's also get you some money market views this morning. First up, we have Kunal Sodhani of Shinhan Bank, who says that strong US labor market and consumer confidence contrast could affect the Fed officials' rate cut forecast. He says the Fed is broadly expected to hold rates steady today, but markets will be looking out for a dovish pivot from Fed Chair Jerome Powell to reignite the rate cut hopes. He says the dollar index is finding resistance at 103.8 levels for the USD INR. He also says 83 to the dollar acts as a support, while 83.25 is a resistance.
On bonds, we've got Neeraj Gambhir of Axis Bank, who says that bond yields initially traded higher on high oil prices led by escalating geopolitical tensions in West Asia, but later cooled on reduced borrowing by the US Fed and good demand in weekly auction. He says curve traded with flattening bias as longer tenor bonds saw strong demand from insurance companies. For the rest of the week, he goes on to add, market will take cues from FOMC and the budget. He expects the 10-year to trade between 7.1 to 7.2%.
Well, we've got a lot of stocks that we're tracking for you in our special Top 10 segment, but let's run you through the list. We're looking at TCS, Mahindra Financial, PB Fintech, Kochi Shipyard, as well as KEC International. All of them will be reacting to positive news flow, while it's even Stevens yet again. On the negative side, we have L&T, Dr. Reddy's, SRF, Star Health, and Voltas that will be reacting to negative news flow.